What's good, boys? Today is the 1st of October. We're going to run through this quick trade setup that I took to end up getting stopped to break even. We're going to look at some of the setups that we could have stopped today, and we're going to look at why the price action has been so buns this last week. So without further ado, just hop straight. All right, so just kind of zooming out, let's kind of look at the market right now, and it's very clear that we have a beautiful market maker buy and sell model on the bigger time frame, right? Just to give you guys some really high confluence analysis here, I'm going to draw in the sell curve right here, the buy curve up to here, right? Or that's not a buy curve, geez. So yeah, buy curve up to this high right here. So we're expecting now this to be the bigger time frame draw, and we just took that on an NQ. ES took that a minute ago, but same exact thing here on ES, right? Now I'm gonna do most of the analysis on NQ. I think it's a little bit cleaner, right? But so understand that we start to today and yesterday we kind of start pulling back a little bit lower in the range, right? So once we see confirmation that we want to go lower, which would have been very clear once we make this change in the state right here, and then we start pushing lower. Once we see that confirmation, I now know price is going lower. I don't know how deep, much lower we're going, but I want to see where could price possibly retrace to, right? And in a situation like this, I think we have about two possibilities, right? We retrace and we tap into the 4-hour right here, and then we just start going higher. Immediately, quick sell off, right back up to all-time highs or wherever we're going, right? That's one possibility. Another possibility is that we treat this as a range like it really is, right? And then we see where in the range can we pull back to, right? Well, we know in our market maker model, there's a couple different areas we can pull back to. We can pull back to equilibrium of the whole range so far, which we beautifully did. We can pull back, we can tap change in the state, which we beautifully did. We can maybe pull back, soup an internal low or something like that, which we beautifully did, taking out a low right here, taking out these lows. And then we can also maybe pull back, rebalance the fair value gaps, which we beautifully did on market open, right? So that's about, what is that? Like 4 a.m. we do that, New York time. We rebound lower, and then now that we have confidence that we could potentially start to push higher, I want confirmation that we push higher, right? So literally, let's watch this, right? 4 a.m. or 2 a.m. we hit 3, 4, 5 a.m., 6, 7 a.m., right? 7 a.m. Once we hit 7 a.m., we had made this into an inverse fair value gap, right? Once we use that as an inverse, what can we potentially expect it to do once we push higher, right? Maybe if we want to continue bullish, we'll pull back, use that inverse fair value gap that was once resistance. Now it'll be support. So we can use that as support to go ahead and take where? Why should we move higher? We have bigger time frame draw, right? We have 1 draw, 2 draw right here, because now this is generated liquidity. This is generated liquidity, right? That's our next draw, right? So we'll just draw this in as an intermediate type of draw that we can potentially look to and then sweep after that, because as well, analyzing ES, there was an SMT at this high right here, which gave some people more of a bearish bias coming to the day. The reason I didn't like that bearish bias was because of this, right? Checking out ES, right, with that SMT in context, that potentially gives you a bearish bias, like, right? Like you can make an argument, maybe we had a fair value gap here, something like that, right? We're maybe expecting price to go lower. We had SMT within fair value gap. Look, big sell-off, change in the state, inverse fair value gap here. My only question to you, and the reason that, I mean, I love this, looks very, very clean. The only reason it doesn't play out is because, look, where are we rebalancing to? We're rebalancing, right? And then how do I know we're not going to continue lower? Because the second we start pulling back, we should either immediately find support, or resistance within this fair value gap, or we should wick the change of the state and start dumping. So when I open the market and we're already way past that, we're already around equilibrium and we're just showing strength, straight strength into that range, I'm probably expecting to see higher prices, right? Especially with the bigger time frame market maker model in line, right? So understand that SMT validates us maybe to these lows. It validates us to whatever price objective are, right? Easy way to think about it is that all SMTs have a job, right? So what was the job of this SMT? In my opinion, it was most likely to go ahead and take price lower to tap equilibrium perfectly into this fair value gap, right? Like that looks like very clean analysis. Once that happens, that SMT high is no longer a protected high, right? SMT has done its job. We can expect price to continue higher, right? So I'm going to quickly run through the analysis from today. Like we said, this becomes its own market maker model right here. I'll just draw this in really fast, kind of give you guys an idea. Right here, all the way up to this high. Boom, looks great. I'm expecting price to do this today, right? Very clearly. So on the 15-minute, what do we see? We kind of are in this range, right? And we haven't made a 1-hour change, but we made a 15-minute change. We've pushed past this high, right? We're looking pretty bullish. We've completely invalidated all of this bearish order flow. So I'm expecting a continuation higher to go run all this lowers and liquidity here. So on open, we're already finding support off of this fair value gap, right? So 8.15, we tap back into it and we place in a kind of internal range. So I'll quickly show you guys this. We place in this kind of internal range right here. 8.15 taps, aggressive push back higher. Now we have a potential AMD model right here. And I'm watching this form and I'm already like, yeah, this is beautiful, bro. Because look, we have this low right here. We have consolidation, which what is consolidation? It's accumulation, right? So we have accumulation here. We have generating liquidity, I believe on one of the, I think it was NQ. Actually, I'm not too sure, but we had a ton of very clean yeah, right here. Look, stacked equal highs right here. Super, super clean. Highs, highs, highs. Literally beautiful. And you can tell that all of these big highs, none of them get swept, right? Like if I saw something like this, where we come up, we sweep the high, we play around, and then over here we come sweep the high again, I'd be much less bullish because now we're taking that liquidity, we're absorbing the levels to potentially flip and go lower. Now we're creating levels that we're absorbing the downside levels, and then we can flip and go higher, right? So on market open, I just want to see manipulation potentially at this low, right? So two things happen here. Why was this such a beautiful model, and why can we execute on it? Two things happen here, right? First, market opens, we push lower, right? Where is NQ, or where, this is NQ, right? We take the low, ES does not take the low. Where is ES in all of this price action? Let's take a look. ES is right here, right? We don't take the low, but where are we bouncing? That's another thing. If you want to have a ton of conviction in an SMT and a manipulation and go, figure out what the asset that didn't take liquidity, what the PD array that's reacting off of it. If you can find a very clean PD array right there, you can get a ton of extra confluence to whatever the idea is, right? So the PD array here, where are we at? Jeez, we're just right over here. The PD array here is going to be consequent encroachment of this huge 15-minute wick, right? So I'll quickly draw this out, pull it over as consequent encroachment. Going back to the 1 minute, what are we reacting off of? And I mean, that is perfect, right? So pulling back to NQ, I thought the price action was a little bit cleaner. We literally see market open in a 1 candle push higher. That's why we can't enter off of that, right? Because at that point, there was no clean entry opportunity. If I want to see this as an entry, I'd probably want to see price literally just chill right here for a second, make an inverse, displace, then tap me, and then we can go. And that would have been a super, super high probability setup for the day. Sadly, we didn't get it. So, I mean, no problem. I'm not mad about it. But yeah, that's pretty much it. So then after this big push higher, right, I'm still bullish, right? We sweep this high and we come back lower. I'm still bullish, right? I'm not bearish. So to take a short here for me was much lower probability. We ended up sweeping, I believe it was, yeah, Asia high right here. And yeah, Asia high, and I don't think we made an SMT. We made an SMT at this point right here. So we had a little bit of confluence for a short. I just didn't like it because I thought the bigger time frame was definitely bullish, right, up to that high. Because like at this point, what are we reacting off of? Maybe this for value gap, Asia high. So every push lower, I'm just going to consider manipulation. So I'm not going to really want to trade the manipulation. I more want to trade the distribution, right? Keep in mind today we were still waiting for 10 a.m. news too, right? So 10 a.m. happens. I'm expecting, right, after we see 10 a.m., what the market does is it goes ahead and it puts in another SMT right here, right? I really want to see an SMT on this low right here. This one right here. We sadly didn't get it. We're super, super close, but we didn't really get anything. Then checking out ES over here. Pull this over. Checking out ES, we didn't even take this low. So we now have two SMTs validating the bias. Super, super clean bias, super clear. But we now have equal lows sitting here, right? So equal lows, strong as on liquidity. I'm expecting price to go ahead and start pushing lower, right? Or start pushing lower to take those out, right? And why am I expecting that? Because we're very clearly bearish on this time frame, right? Until we took liquidity. And what did we leave? We left big obstacles to price moving higher, right? We left these huge fair value gaps right here. So I'll draw this in right about here. Huge fair value gap, right? Right at equilibrium of the range. I'm expecting, hopefully, price to go ahead and find resistance at that level and push lower. Why is another reason I'm expecting that? Not just because it's my idea, right? Because we have 10 a.m. news. And I want 10 a.m. news to kind of give us a fake move so that everyone who's going long here gets faked out before we get real movement as well. If we push lower, we can check out the equal lows on ES. We can create the SMT here and even further SMT. So not only do we have this one, we also have this one, right? That'll be super, super clean. So I want to see that happen. 10 a.m. news doesn't do that. It doesn't take the low. It literally just plays around, pretty much does nothing. It makes a huge wick right here, stopping whoever had their stops out here, and then price continues higher, right? There was no high probability entry here, and because of that, there was no long setup here. So what did I actually end up taking? I did take something later in the day, and I'll show you guys right now. I took a short, right? Why did I take a short? It sounds kind of counterintuitive after I'm talking about this long buy so much, right? But check this out. After we had this as our draw on liquidity, we're expecting this to become our draw on liquidity, right? After we go ahead and take this, NQ is all the way up here, takes a level at 11. At 11 on ES, where are we? We're all the way down here, right? So I'm at least expecting, especially as we got closer there, we started putting in equal highs, we started generating liquidity right here. I'm expecting to see a potential sweep of this. If we get reaction confirmation, I'm expecting to see a type of push lower to take some of this generated liquidity and potentially rebalance. Where can we rebalance to? To take that liquidity and to go ahead and maybe pull into a fair value gap to go to equilibrium, some kind of range, right? So that's what I'm expecting. So this fair value gap was a really nice fair value gap to go ahead and see get rebalanced to. Then going into the 1 minute, I like to ask myself, where does the generated liquidity end, right? That's another big thing. Where does it actually end? And even though the fair value gap starts right here on this low, generated liquidity ends here. So if I'm confident, I can take a trade down to that level. So what do? I wait until we see this right here, internal sweep. I really wanted to see price go right here, right? Right here. Let's draw this really fast. I really want to see price just completely inverse this, but it was actually nicer because I've been backtesting this, and I usually really like changing the state and breaker patterns. And if that's kind of nonsense jargon to you, consider this, right? Price can turn around two ways, right? And in my experience, the highest probability reason or way that it does it is this pattern, right? We take liquidity, we do this, and then we pull back and go, right? The other way price can turn around is it does something like this. And if you look, this pattern is nestled within this pattern right here. Same exact thing, right? So price, usually you like to see that stop raid, right? The only thing this is missing is the stop raid where we go ahead and do this, then we pull back and then we go, right? But a lot of people use something like this, right? And that's kind of, I forgot the exact term for it, but it's more of a breaker structure, market structure shift. And the other way is like a change in the state. It's really, really high probability, the breaker pattern, but this pattern also works, right? So I've been backtesting this. I've seen a lot of results with it. So I go ahead and I take this as change of the state in the risk for value gap right up here. Looks pretty clean, right? I'm expecting price to go ahead and start rolling over to take some of that generated liquidity. So I take my entry right about here on that change of the state. Wasn't really expecting price to pull back all of that deep, but if you did take a trade there, I thought that was really clean. You definitely could have taken partials here and actually got a trade in. But for me, my point of going break even was two things, right? Well, let me show you how I took the trade, right? I took the trade at the change in the state, stop at that high, and then I ended up leaving my first take profit to this low because I was pretty confident we went there, right? We see big displacement, price looks pretty good to go lower, and then as well, drawing in that, that standard deviation, yeah, fib retracement right here. We go ahead and draw that from here to here, from the high to the low. We get really nice -1 aligned there, and then as well, -2 to 2.5 is perfectly aligned with, let me quickly draw it in, equilibrium of the entire range, right? So if price wants to sweep that level, right, and it wants to go ahead and push higher or push lower and rebalance first before ES goes in and takes the level again, then that's a possibility, right? Keep in mind, we have the SMT here. That was another big reason why I had confidence with the trade, was this SMT. So I took the trade, and the reason why, in my opinion, this didn't play out was two things, right? Well, let me say this. I took my trade off at break even because if you check out ES at this time, we're literally doing nothing. This was ES, well, yeah, NQ was pushing lower. ES was doing nothing, right? So that's the big thing. We talked about that before, right? SMTs. Whenever you have an SMT in the market, the reason is that you're choosing which one to trade is for two things. Number one, what is moving more? And then number two, you were trading a short, it's better to choose the weaker one. But moving more is the biggest thing, right? So what's moving more? ES wasn't moving, NQ was moving a ton, so I took NQ, right? We ended up not even putting in any kind of bearish or bullish SMT, I'm pretty sure. I think we just literally actually, I think we did, but yeah, so NQ is moving lower. We end up pushing back higher, and ES literally still hasn't moved. At this point, I think right about this high or something like this, we put it at SMT with the bigger overall level, right? The external level. So for me, it's telling me if we want to go lower, there's no reason for price to go higher at all right now, unless this is just going to be successful and we're going to run it. So I put my stop to break even and we immediately get stopped out, right? We're up probably about 600 in profit, but I didn't take anything off because I wasn't feeling the trade, just completely honestly. I wasn't feeling taking profits here. I was pretty confident, at least we go to this level, right? Tap into the 15 minute, then I could have made a case for taking profits. But I think the way I managed this was fine, right? So why didn't this play out? Two things, right? Number one, if you check out ES, at least I was expecting to trade a rebalance, right? I wasn't expecting a crazy big move. So the setup makes a lot more sense. But at the same time, ES is looking bullish, right? And times like this where it's later in the day, right? So whenever it's later in the day, I'll pull back. Whenever it's later in the day and we see kind of those setups where one asset's very strong and one asset's maybe weaker and we didn't take a higher or whatever, and we're looking to trade a reversal, that's only really going to do us best when it's early in the morning, right? Very early in the morning, and we're getting tons of movement. Yeah, let's go. That's only gonna do us best when we're early in the morning, we're getting tons of movement, and we can take a 1 minute setup off of a 1 hour liquidity sweep, right? But there's also times, right, where like, let's literally draw this out. Say this is NQ, right? NQ has all this stuff, right? It takes a high, it starts going higher like this, right? And then we're expecting to see a bearish bias, right? But ES is doing something like this, right? Where it's still generating that same liquidity, but it doesn't take the high, and then you get some kind of short setup right here. If you take this, it's most likely going to be much lower probability, because what are our S&T rules, right? You have this as a weaker asset, 100%, but NQ is just moving so much that it's almost like a leader and follower kind of action, right? NQ is literally just moving so much. ES is almost like it wants to go lower here, but it's being dragged up because NQ is moving so much. So it's kind of stuff like that you have to recognize, and that usually will happen after our first kind of before like after probably 10:10, I would say New York time. After 9:50 macro ends, you see a lot of that action, because at that point we've seen kind of like the 5-minute manipulation. Like look over here, we see 5-minute manipulation, and then we start to go for the day. That kind of stuff is like, in situations like that is where we really start to see like that's when we get our trade, or that's when we see kind of price start to run for the day. After we make the bigger time frame, the 5-15 minute, after we make that manipulation, that's when you see price run for most of the day. But yeah, so trading SMTs like that, it's not really going to be the best setup, right? So I'm expecting ES, even though we have an SMT at the moment, I'm still expecting ES to go ahead and take the external draw. So it's still kind of pulling NQ up with it until ES takes the draw. Then we can maybe see some exhaustion, trade a rebalance, something like that, right? The second reason is this. This is simple stuff too. This is a simple mistake, but most of the time, later in the day, like I said, after we see 9:50 macro end, so around 10:10 after that, price has made its direction, right? And when we see a sweep, say it's a 1 hour liquidity sweep, when I see that, most of the time, it's just gonna be an example where if I see a 1 hour liquidity sweep, I'm not gonna be wanting to trade a 1 minute break of structure and trade, right? I'm more so gonna be waiting for a 5 minute or maybe even a 3 minute confirmation, something like that. And I wanna see generated liquidity below us, right? Even though I'm trading that internal model, understand the ramifications of what happens if the trade setup happens, right? So if the trade setup happens and it plays out and we take that low, right? We take this low, what does that do on the bigger time frame? On the bigger time frame, that is 5 minute change in the state, which we make, right? If we made that 5 minute change in the state with displacement and we rebalance, that would give us confirmation to go lower, because even though we're rebalancing, right, we have bigger time frame sweep, we have SMT, we have confirmation because we saw change in the state, inverse for value gap, all that stuff, right? That would give us confirmation to go lower, which we are confident that price doesn't really want to go lower, right? So understand, what I'm trying to say that is that if I want to take a short after a big buy side level gets taken, or sell side level gets taken after 10:10 New York, I'm waiting to see bigger time frame confirmation, right? I want to see a 5 minute confirmation. If I got a 5 minute confirmation, and then I like to trade maybe a 30-second model, if price gave it to me, then that would be much better probability, right? That's kind of like how the market works, right? You're going to see things proportional to things, right? If we tap a daily level, we're not going to immediately see a 1 hour push or a 1 minute push higher, right? We might see that, but that's usually going to be a fake out, stop rate, and then we go, right? So recognize that and understand, like 1 hour, we probably want to see a 5 to 3 minute, 15 minutes, some kind of model play out there, right? I don't just want to be taking a 1 hour tap unless it's early in the market and we're seeing those big manipulation moves and quick goes, stuff like that, then it's fine to trade that. So I think those were the lessons from today. Overall, it was a super awesome trading day. The price action this week has been kind of buns, I'm not gonna lie. This setup could have been amazing, but it just kind of fumbled the bag. I'm pretty sure, in my opinion, I think it's because we have a ton of like kind of uncertainty with the government and all that stuff going on right now, especially in this week. So that's why I would say the conditions are a little bit buns. But I mean, overall, I think it's just kind of a day to work on discipline, honestly. Just sit back, work on discipline, take our setups, and not care what happens. I think it's kind of that kind of day. So overall, I'm happy to trade today. Happy to give you guys some content, explain some of the things I was going through. So, I mean, I think that's pretty much it. So, I told you boys again. So, peace out.